What up, y'all? Eric here. So let's go ahead and get into this thing. I ain't gonna tell you all that like and subscribe junk. Y'all know why we're here. We're here to talk about some stocks, okay? Mainly, we're gonna talk about these two trades I took today here. Um, so as y'all know, we're trying to do this $5,000 account challenge, trying to grow this thing as much as we can. Like I said, my goal is to shoot for $100 a day to see how much we can grow this thing until we get tired of doing it. But this video is gonna be very important because you're gonna get to see good trades and bad trades, and we're going to cover both of them, okay? Um, and pretty much how they planned out. Now we're still ahead of the game, up by like 600. This is what, day 4. Again, the goal is to do $100 a day, but you know we're way ahead of schedule. Today's the first red day of the month since we started, that I ended on, but it wasn't too much of a hit. Lost about 200 bucks, but again, we're still up by like $600 on day 4, so we got still a good little cushion there. Um, so the reason why I wanted to do this video is so that you guys can see a good trade and a bad trade. Um, am I upset that I ended on a red day? It's the first red day of the week, or actually the month. Am I upset about it? A little bit. Obviously, you always want to, be a good, have a good game, but I'm not too upset because I know exactly what I did wrong. I know I need to fix it. And when I kind of cover the things that I did wrong, you guys were like, what the heck was you thinking? Even when I was done, I was like, what the heck was I thinking? But, it happens sometimes. But this is a good, example for you guys of why risk management and goal setting is very important, and also not getting greedy. Because that's kind of basically what it boiled down to. I mean, my emotions didn't really get the best of me. Well, they did, because I not only was I kind of greedy, but got a little cocky too. Um, you guys know I really, get red trades because of my strategy and how I trade, and I just kind of perfected my craft over time. But it still happens. It's going to happen to the best of us, and this is a perfect example of that. How everything can go right, and the trade can still go wrong. So there is no all-in-all solution. You guys need to know that. But again, that's why risk management is very important. So what we're going to do here, we're going to get into these two trades that I took. And I just want to kind of cover those with you. Sorry it took a little long to get this video out. Actually, I was trying to wait, man, because Walmart was restocking the PS5s at 3 o'clock, and I was waiting online, trying to get, obviously, the bots bought them all, and stupid scalpers bought them all at like 3:01, so they were gone right away. So that's kind of why it put me on the delay with this video. But also, too, then the maintenance man came. I'm actually at home, for once, and they had to do that stuff too. So it took me a little bit of time to get on here to be able to make this video for you guys. But I said I was going to do it because I wanted you to see the goods and the bads and the uglies of the trades. And just full transparency. I want you to know exactly what I'm doing. Get a good feel for it so you can kind of get your idea, when you got your head in the game and what you want to do when it comes to trading. Okay. So not only my wins are great to look at, but also the losses are too. And I wanted to do it with a smaller account because, a lot of guys think that just because my account's much bigger than most people that, I'm having great gains because I have such a, you know, big account, but that's not really the case. As long as you have your strategy in place and you repeat the process over and over and over, compounding over time, you're going to be able to do the same thing that I'm doing. So, again, this is a marathon, it's not a sprint. That's why I want you guys to understand that you got to be in this for the long game, not the short game. Yeah, the fun profits here and there are great, but you know you want to be able to do this consistently over and over again. I'm going to show you guys how that plays out, just like in those videos I showed you about compounding and how that works for day trading in the learning lounge. So let's just kind of get into it. I mean, it's pretty simple, man. These alerts just they're everything. I mean, it's hard enough to learn how to trade, guys. Then it's even harder to learn what to trade, which is, why the alerts are there and the chat room is there and why it's so cheap for you guys. So you know exactly, what to get into, and you can eliminate half the issue. Like I said, learning is hard enough, but knowing what to trade is very important. So that's what the alerts are there for, to eliminate all that for you. If you want to take your own time, develop your own scanner and all that good stuff and put the formulas together and all that stuff you need to trade, that's fine. By all means, go ahead and do it. No two people really have the same scanners. In fact, ours is very customized. It's actually a combination of me and a bunch of other traders who actually got together, and we kind of put our stuff together to kind of make these alerts. But we found out that they work for a lot of traders. Obviously there's no one size fits all things, but these are mostly for day traders. Um, and so many people like it. But again, this came from pretty much a combination of myself and a few other traders being able to find these alerts. This is why we are able to find things like that before they pop. There's a lot of aspects into it, but again, it's up to you. You ain't got to trade what we trade. I mean, I've seen other chat rooms charge like, they'll tell you, make it sound to you. They'd be like, oh, it's $3 a day, or $5 a day. $5 a day for 30 days. $3 a day for 30 days. That's like 100. I mean, that's a lot of money. It's almost $100. You can use that $100 to trade. But I mean, I figured 20 something dollars is nothing for you guys. I mean, usually the day or two by the time you're in the chat room, made your money back. But we also want you to wait a week and see how the trades work for you. But anyways, so let's just kind of jump into this thing, and we'll dissect this a little bit. But ZY, as a matter of fact, let me pull this up for you guys here. Let me kind of give you an overall view of how I did my trade. Let me pull this up because I don't want to have to load up the account numbers and everything. So pretty much I did 2 trades. And you guys know I do 1, 2, maybe 3 or 4 at the most trades a day, because I'm very picky with it. I just want to get in, get out, get my money, and go about my business. Now it may seem cool because, okay, yeah, you made a couple $100 or so within a minute or two, but you got to remember, a lot of times I'm waiting hours and hours and hours for those 1 or 2 minutes to make my money and leave. Okay, so it's not like you're just waking up, boom, oh, there it is, go trade it, boom, and go back to. I mean, it is kind of like that, especially if you have the alerts, because the alerts will just tell you when to kind of look at the stock, and look a few minutes later you just look for a play and it's there. But for the most part, I like to be up and look at other things and news and all that good stuff. So, which is going to lead into what happened. But you kind of want to be attuned with the market as well too. You don't have to be. After a while, when you perfected your strategy and how you trade, and you look at the alerts, you're like, okay, I know to do this, I know to do this, and I know to do that. All right. But anyways, back to the trade. ZY is the first trade I took, and then NAUT was the second trade I took. Okay. So pretty much this is kind of like the overall the trades that I did today. You kind of look at that. So I just cropped that out so you guys don't have to look at all my account numbers and all that good stuff. But let's just jump into it. The first alert with ZY, we got that thing super early, guys. Let's see here. Oh, and let's talk about BT. I mean, we'll talk about that when we're done. But anyways, ZY came out, spiked up at 9:35 pre-market, which was like 5 o'clock Eastern time. So I mean, way back here, guys. So anyways, you probably already know why I got into the trade. Spiked up, blah blah blah. I waited. Pre-market, it looked great, but you know me, I don't want to really hold into the bell, so I waited because I'm not a scalper and all that good stuff. But it just looked too pretty, and then it halted right out the gate. That was like the first thing that halted. So what happened here? We was actually in the chat room. I was in the trade. I think one of you guys messaged me. I think it might have been Kim. Somebody messaged me and asked me a question about ZY fitting the trading strategy that I go over in the course. And I was like, yeah, it does. Sorry if it took me a little bit of time to kind of reply that in the chat room, because again, you guys, I'm trading as well too with you. So that's why, like, a lot of times, especially during open and bell, nobody's chatting. Nobody's doing it because we're all like either focused in the trade or looking at the market. So if I get to you a little bit late, I apologize. It's just because I'm probably in the trade myself and I need to focus on what's going on. That's just how I am. Okay. But I did eventually answer your question, hopefully, Kim. But yeah, it did fit all the criteria of what I look for to trade, and that's why it was such a successful trade. I think she said it was like chapter 13 in the course, or whatever. But yeah, I was like, that's exactly what I was looking for. So let's kind of look at this. After it got halted, I jumped in the trade at about 9:37 ish, which was like right around this area. Threw 100 shares in, longing it right after the halt. Boom, got in. Then what I did was I scaled into it, which was adding more to my position to bring my average up, because I can kind of tell from level 2 and everything that, hey, I was going to pretty much do my ride the wave strategy on this one until I seen the other reason to get out, which I didn't see a reason to get out until about roughly 9:40 was when I exited that position, which was a little bit right here. So I got in right here, got out right here. Good little profit of I think it was like 80 something bucks. Now my goal is $100 a day, right? $100 a day for the next, whenever I get tired of doing this and go back to use my main account. So I'm already, a couple dollars off. I was like $13 off or something like that, right? So made my profit here, right? Boom, strategy done, complete. And this is why it's important to have a goal. Yeah, my goal is $100 a day. Don't need to push it. But if things are going in your way and you know what you're kind of looking for, that's fine. So if you guys know my other strategy, I like a lot of times this is like the main strategy I do. I wait for pullback to see their support, right? So made my money from here to here, bulk of it from there to there. Then it began to pull back. I assumed that it was just going to be like a, you know, up and down thing, which is why I did that strategy. Why did I assume it was going to be like that? Because in the beginning of the day, the market wasn't like super green. I mean, pre-market was all red, and then it turned green later on in the day, which is going to lead into what I'm going to talk about in the next trade. All right. But anyways, the market was still kind of reddish. Wasn't seeing like much growth. So I'm like, okay, this is just going to be a up and down thing, which is very risky, which is why I did the trade that I did. If you know my strategy, you know why I did that. I got in and got out. Didn't want to risk it. But you know, my other strategy, I like to wait for pullback. This thing had a lot of eyes on it, especially since it was halted. I'm like, okay, let's see where it comes back down to. If it doesn't go back down, if it shows some support, I'm going to get into it again. It began to come right back down, right? And so I went and jumped in it again at about 43, like right here in this candle right here. I said, okay, those are some good candles. So I got in, let it do its thing, bought some more when it held more support at about, when did I buy it again? Because I doubled down on this one, about 49. So like right around here, I was like, okay, this was some good looking stuff. Why? Because middle of the RSI was there. I was like, that's a good range for me, risk to reward tolerance, for me to be able to exit the position if I need to, and if not, keep going. So it showed me some good signs there as it began to light up on the turnover of the moving average convergence divergence, which was great. Now my average has been brought down because I doubled up in my position. My average was brought down, so I have more room to take something up. I didn't want to risk it too much. I wasn't sure how long it was gonna, take to roll over, and so eventually I sold my position at about 9:55, which was like right around here into this green candle. I got in, doubled down, got out. Let me repeat that. Got in, doubled down, got out. Why did I get out there? Because the relative strength index was kind of showing that it was eventually going to be over. So it was getting close to being oversold, right? And so at that point, as it began to light up, I was like, what if this is the top? I wasn't too sure. So let me just go ahead and take my profit and move on. Boom. Okay, I did that. Great. Now I'm even closer to my goal at this point. Um, I was just like a couple. I think I either hit the goal of $100 or I was kind of like a little bit off. But anyways, boom, two successful trades back to back, just using both of my strategies, which are two different strategies. So I'm good there. And then I kept watching it. I'm like, man, this thing is still red on the moving average convergence divergence, but it's still holding some good support. That's great. So eventually it has to roll over again, right? Which means the buying strength is going to come in. You guys know my other trade. I love playing when it breaks out, and this thing just flagged. It just happened to be that I did good in trading within the flag, which again, is dependent up to you. You know how to trade if you want to do it or not. But it broke out again, and this time it just kept going and going. So I got in one more time. I was like, okay, this is gonna be a little bit better. Got in at like 12:21. Then I got out at 12:40. Not too bad of a game. It's just a couple of bucks. Then I got in again, and then got out again. So here I am sitting on cloud nine. By the time it's what, like 10:24. I'm like, man, I did a good trade. This was a good play. Everybody's banking in the chat room. We're all going crazy. Yeah, yeah, yeah. Yada yada yada. Good play, good play. Okay, great. ZY was a good trade. I don't know. This was a combination of just kind of great entry points, great exit points. Was there a catalyst for ZY? I don't think there was, or maybe there was and it wasn't alerted. I don't know, but the sheer numbers and just kind of looking at level two, pull it up here. Look at that. And the UT is still up for me being pissed off at that trade. Sorry guys, but yeah, I think they might have some news here. And I don't know if it's still moving because it is after hours, so it's probably still doing some moves. But anyways, obviously in here I'm trading it. This is how it was looking. Everything was looking good. It rolled over, rolled over, rolled over. Perfect. See, this is the 1 minute chart, guys. This is the 5 minute chart. I usually look at both for confirmation. So I'm looking at this one when I'm in the trade. And then when I'm in the trade, as it's going up and it's going down, I'm kind of more focused on the 5 minute chart, the bigger picture, because what's happening within the 1 minute chart is going to be happening on the 5 minute chart, but the 5 minute chart gives you the overall picture. And obviously the moving average convergence divergence was red here, and I didn't want to wait that long, which is why I kind of got in and got out when I did. Didn't want to take no chances from the way the market was, because I assumed the market was going to stay red, but it didn't. But that was ZY. Again, if you're looking at what I'm looking at on the screen here, you see all the key things that I look for when it comes to trading. Level 2 was looking good. The stats that I need to look at was there, like I told Kim. Boom. So that's why I executed that trade versus, I think we had talked about maybe jumping in like HUSN, or maybe even a few minutes before somebody had asked, what stocks we're looking at. I was like, I'm just looking at, I think it was like OCGN and something else. But then as it got closer towards the bell, it started looking weak. And I'm like, okay, nope, move on. Because that's what the alerts do, guys. The alerts tell you, hey, look at this stock, it might do something. You need to know what you're looking for in your trade, the way you trade, when it comes to the alerts, because all they're going to do is tell you what to look at. They're not going to tell you what to trade, when to get in, when to get out. They're just telling you, hey, this stock might be moving, might be doing what you need to do, so take a look at it, see if it'll fit your strategy. And of course, ZY fit my strategy, so I did it. If you pull up the stock and it's not doing nothing that you like, move on to the next one. And like I said, you guys, me personally, I don't jump in on the first alert. First alert goes up, I look at the stock, watch it go up. And this is where a lot of you get into trouble, because FOMO kicks in for you. You see that alert go off, and then it goes off again and again and again. And it's still going off within the same time frame of it being in the rising portion of the moving average convergence divergence, or even just in general. And that's, again, like I tell you guys a lot of times, the stocks will shoot up and shoot back down more than they'll shoot up and just keep going. Why? Because that's just the way stocks are. Profit takers going to take their money, things like that. So this is why, like, the best rule of thumb for me when I started trading and started learning about what to do, this is why I use what I use in my trading time. So learn to look at that and see that and trade it. It's really the best thing you can do. So, wait for that moving average convergence divergence to roll over. Why? Because that thing is going to give you your support. To me, when I trade, I'm looking at this. I'm waiting, let it spike up. I'm like, I'm not going to get FOMO. Okay, let it run, let it run, let it run. It still hasn't rolled over yet. At any point in time, this thing can just go bloop, and you're done. I'm going to let it roll over because I want to see where all the buyers are waiting and trying to get the most of their money. And this is going to show you. Now, at the next point, you can try to, like I said, predict for this to break out if you want. I like to wait for some type of confirmation, because the reason why I say that is because this thing can roll over and be green, but what if it's just stopped right here? That happens quite often too. So I want to wait for a breakout before I decide to jump in on that ride. That's just how I trade it, guys. I mean, you do what you want, but that's just me. It's been the safest thing that I've done. So if I see a stock shooting up, it's getting alerted. Oh man, it's rising, it's rising, it's rising. Great, it has to come back down. It has to come back down. Let's see how far it comes back down. Many times it'll come right back down to where it started. And you're toast. How do I know what I'm talking about? Well, let's look at trade number 2. Let's see if I can pull it up here. The second trade, NAUT. So this is why I don't like screen record while I'm doing stuff like live, because the computer just gets slower and it just freezes up. And if I was trading, I'd be really pissed if I was trying to record stuff and it just, froze up on me while I'm trying to trade. So this is why, another reason why I don't do recording the screen while I'm trying to trade, guys. But I mean, I have my other computer, but that doesn't have like recording software on it or anything like that. And this is like more like a gaming computer. I use that to try to execute the trades anyway. So I'll like run stuff on this program, on this computer. Every now and then I might execute something on there, but most of the time I'm on the gaming computer because it's just set up for me to trade quicker, from like what I told you guys in the, in the course, how I have like my hotkey set up and all that good stuff. But anyways, let's not steer off course. NAUT. NAUT. Guys, so this stock here, it fit everything under the sun that I thought would be a great trade for me to make some money on. Sorry, I'm just tying my shoe here. All right, so let's talk about this bad boy. We got that alert, right? Let me pull that thing up. Silly on me. I probably broke every rule that I do when it came to this trade. NAUT spiked up, then got halted. Then it had good news. Um, so, I mean, obviously, Amazon, holding shares of it is a good thing. Is Amazon? Everybody loves Amazon. You know what I mean? They're gonna have good news. Let's also look at the level two here. So I assume this one's gonna run for me. Let's just talk. Let's take a step back. It got halted, right? Usually, guys, the circuit breaker halts are lasting 5 minutes. Every now and then, it could go to 10 to 15, depending on, what's going on in the market with the stock. Circuit breaker halts usually last on average about 5 minutes, then they resume. Okay. Another little thing here, when you guys, because a lot of you ask me about, well, how do you, when you jump into the stock, how do you know how many shares you're going to play? How do you know? You got 5 minutes. If you're not in the trade, if something's spiking up like that, and you got 5 minutes to start planning your entry points, your exit points, how much you're willing to lose, how much you're willing to, you know, exit out and get your gains. You got plenty of time to plan that stuff. If you can't plan that within a 5 minute time frame, stop trading, go back, go to the drawing board, read the books, look at videos, learn support resistance, learn risk management, learn that stuff before you start to do that. But you have 5 full minutes to start planning your trade when there's a halt. Okay. Um, so let's take a look here at this thing. Got alerted, halted right here. I got in after the halt. My crazy self. So we had a catalyst. We got good stats. Level two was looking good. I knew it was going back up. I just knew it by the way the level two looked. And look, it did. It did. Good stats, good catalyst, good numbers, great position, playing my risk management. Everything that I needed to do was executed perfectly. More importantly, too, at this point in time, the market had turned over. This is like 12:30. What time was this trade executed? Yeah, it was like 12. It's like right before, I guess, the end of the day or whatever. Market's already green. Everything's looking good. I know earnings is coming out for a lot of places, so a lot of things are going to be spiking up. I mean, today just rolled over pretty well, so I'm like, okay, this is going to be a good trade. I already hit my goal, and I told myself that like right after I was done with ZY, I was like, man, that's my trade for the day. I'm done for the day. I don't need to do anything else. Nothing else is going to happen. I'm just going to sit around. I didn't hit my goal. Boom, done. This stock went off. This alert went off. I looked it up, looked at all the things I needed to look. There's a cat, like I said, everything checked the list that I needed to trade. The market turned green. I'm like, okay, we got another run in here. I got really greedy. I said, you know what? It's halted. I can jump in this thing. I can get in. I can make some money, make some more money, and we'll get even more further. I got greedy. I'm not gonna lie to you. In my head, I'm like, yeah, I'm gonna make another $200, $300 off of this play right here alone. Got in, pulled back a little bit. When did I get in? I got in like right at the like 47, which was probably like right around here. So I'm smiling. I'm like, okay, yeah, two little green candles, two little red candles on the green movement. I got a good dip in. It started to go up. I'm like, oh yeah, man, this is great. This is doing exactly what I want. I'm thinking in my head like this thing is gonna run, like run. Wrong. Not only that, when this happened, guys, again, like I said, I was feeling cocky. The main reason why I did bad on this play is because I walked away from the desk, guys. Don't do that. If you're in a trade, there's so many things that can go wrong. You can have power go out while you're in a trade. You can have, internet disconnect. You can have the computer freeze up. You can have the broker shut down. I mean, there's so many things out of your control that can happen when you're in a trade that you need to eliminate as much of that as possible. But myself, I know better. Got up and I walked away because I was hungry. I ain't gonna lie, I was hungry. This was like lunchtime. I got up and I walked away from the desk for like, I was like, it's gonna be a few minutes. Let this thing run. Even better, so I needed to step away from the computer because I don't want to get pressured into taking my games too early. I'm already ahead of the game. I was up at like I was up by like 300 at this point, I think. I'm like, okay, great, great. Go make the sandwich. I made that sandwich. That sandwich cost me $200, guys. The $200 sandwich. Whatever the profit and loss was for today. Anyways, stock went up, then it started to pull back. Now, not only did I get greedy, rule number two, I broke my rule. The strategy that I went in on this one with, I should have got out probably around here, or right around here. I know how the moving average convergence divergence works. I know how RSI works. I know how super trend indicators work. I know how all that stuff works. For some reason, I did not want to get out this trade, even when it was giving me all the signs that, hey, get out this trade. I was being stubborn. I'm like, yep, I should get out. But I'm like, nope. I'm holding on to hope. It's going to come back. Please come back. It's going to come back. Never came back. So meanwhile, sign that it wasn't coming back. Sign that it wasn't coming back. Sign that it wasn't coming back. Was all there. Everything was there telling me that this stock is done. Volume started to lighten up. No more big bars. It's all little bars from here. That's just telling me that sellers are eating away at this thing. But I'm waiting for this to roll over and roll over. By the time it got here and rolled over to the green, and I'm like, man, the volume is dead. At this point, and the worst part about this is too, guys, I kept buying. Do not do this. I was trying to average down. Another rule I broke. I never try to average down. The only time I'm averaging down is when I had planned for it. And I'm doing, I think I call it the double Dutch. I do one of my strategies where I go in with a little bit of shares, the one that I cover in the course. I go in with a little bit of shares, break in, and then as it's coming up, break in again, and then let it take off. But anyways, don't average down. If you don't take anything else from this video that I do, don't average down. But I did it anyway. Trying to I'm gonna cut my losses. I was already down 100. Boom. Bought some more shares at a lower price, hoping it'll come back up. Guess what? Now I'm down 200. Then did it again. Then at one point I was down 300. It just kept going, guys. Kept going. Do not average down. Cut your losses and take it. I know for a fact that even as it's thinning up right here, it's a possibility it won't even go back above the VWAP, and it didn't. So by the time the moving average convergence divergence rolled over again, I just said, you know what, just take my loss. And got out. It got me back up to like 200, but still overall a negative trade for the day because I was being stubborn. I got greedy, broke my rules, walked away from the desk, did all the stuff you should not do, all in one setting, and I literally gave back not only the profit of $100 that I made today, but also $200 more of what I made yesterday on that $600 game that I had. So therefore, lesson learned. All right. Focus on your trade. When you're in your trade, focus on the trade. I know if traveling and trading, that's fine. That's cool, but try to focus on the trade when you're in it. Okay. So lesson learned there. Trying to think of what else that I needed to cover in that. But anyways, the main reason why I messed up in that trade was because I walked away. Point blank period. And then not only did I walk away, but I didn't stick to my plan. My loss would have been a lot lighter had I took it when I instead of trying to fight the trend and fight the fight the market, thinking like, oh, everything's green, is going to come back, it's going to come back. No, that wasn't part of the trade, the plan. To get out at that point. Get out. Because the reason why they say cut your losses quickly, they don't mean just because a lot of you guys get this misconception too. When they say cut losses quickly, they don't mean cut your loss when you're in the middle of the stock going up and it just goes down a little bit. Like let's say on the 1 minute here. They don't mean cut your loss right here. That doesn't do you any good. They mean let's say if you got in here and you cut your loss. That's not cutting your loss. You're exiting your trade early. There's nothing really happening within these 3 minutes. You're not cutting your losses. This is cutting your losses. When you see that there's no reason for you to stay in the trade, cut your loss quickly and get out. Because if you stick with it, it's going to keep writing down. That's what they mean by cutting your losses quickly. When a trade is not going your way and it's not going your way based on the way you trade and your strategy and what you were expecting the trade to do, cut it and move on. Because let's say the trade was to do what you thought it would do, or it sets up that position for you to do what you were going to do anyway, you can always get back in. Well, not always. I mean, obviously, if you're like at the PDT rule or something like that, you can't get in. But for the most part, the next one to come, guys, move on. Cut your loss, move on. This is the market. It's not going anywhere. And that's a hard lesson for a new person to learn. Especially, it was very tough for me when I started. Um, was admitting that and knowing that. But I promise you, there's going to be another trade. That's why I'm not too worried about what happened today. Yeah, I lost what $216, but that's fine. I bet you what, I won't get up and walk away from my desk when I'm in a trade no more. If I do, I'm gonna bring my phone and hover with my finger over the button, ready to cut it loose. But it's all good. Tomorrow's Friday. It's another day. We'll see where this journey goes. Again, we're $600 up, so we're like $200 scheduled. We got 200 bucks of cushion scheduled in there for us based on the great trades that we did. Um, yeah, I mean that was pretty much it. I told you guys I'd tell you why I lost that money, and that's why I lost that money. So learn from me. You don't got to be glued to your phone or glued to your computer, obviously, because you have the alerts. But when you have your plan, stick to your plan, and you won't lose money. Even if you do lose money, it won't be as much as it should have been, or as it could have been, if you stick to your plan. So let's get ready for tomorrow. The aftermarket is almost done. The watch list will be out shortly for you guys. Let's make some money. If you guys have any questions, let me know. A lot of you guys have been sending me messages, which is great. I'm glad the alerts stuff like that is working out for you. That's why I made them, and that's why I'm trading along with you guys. So I'm gonna show you the good, bad, and ugly. So hopefully this stuff works out. Just to kind of give you some motivation. You don't gotta have a large account. You don't got to do all that, but it is possible to grow your account. Because if you think about it, $100 a day for 252 days, which is the amount of days you have to trade, it's still like 25 grand, guys. I mean, what's an extra 25 grand? But again, none of this will be possible if you don't know what you're trading, you don't have any kind of foundational knowledge, and you haven't practiced or anything like that. I mean, this is a marathon. Again, it's not a sprint. Um, so you might be down, you might be losing a lot of trades or whatever. Just don't give up. I'm just gonna tell you that. I mean, just keep grinding it out. Remember, guys, it took me 4 years, 5 years just to even break even. That was after blowing up a couple of accounts. But each time I got better. Another thing that might help a lot of you out, and I kind of go over this in the course, like after I teach people like how to develop their own strategy. A good thing for you to might do that might help you out, depending on where you're at in your trading time, or just period in your trading career. Focus on one part of focus on one aspect of trading. Don't try to do the whole thing because it's a lot to learn, and there's no way you can master all of this in like 1 week, 1 month, 1 year. It's too many moving parts. So focus on one main part. Like if you want to like, hey, I just want to study charts. I want to focus on chart pattern. Okay, that's fine. Get a list of charts, see which ones you like. Focus on finding that. Like look at the alerts, see if you can focus on finding that one pattern. Or if you're like, hey, I want to master how to use the VWAP indicator. Okay, pull up the alerts, pull up the charts, pull up some stocks you like looking at, and look at how the VWAP affects certain stocks. Oh, I want to learn about certain sectors. Okay, pull up the EV sector and learn about how the stocks are moving in that sector. I mean, there's so many different things that you need to focus on one part at a time and master that. Once you master that one portion, and you know that, move on. Then the next thing. Well, Eric, what portion should I focus on? I don't know. That's up to you as a trader. I mean, I show you in the course how to try to, what things to look at. So you can pick which one of those things you want to focus on first and study that for a month or two, then move on to the next thing and the next thing. But that's pretty much all I can tell you guys. You know, that's it. This is it in a nutshell. So let's keep pounding it out. Hopefully, y'all know me. I don't like trading on Fridays, but if I got to, I got to. If it's there, I'm gonna take it. So let's rock and roll. Hope you guys enjoyed this video. If you have any questions, like I said, message me. I ain't gonna tell you do what I like and subscribe stuff. You ain't even gotta do that because I ain't trying to blow this thing up on YouTube. But if it does happen to do that, that's great. But just trying to help out you guys who are trying to learn how to trade, and we can keep on moving. because it is possible. And I'm going to show you it's possible. So stay tuned.